You see, this is precisely the reason why traders should transition from just trading CFDs to trading futures, which actually I'm speaking to those who are trading indices now. If you are trading forex, this is not the video for you. So yesterday it did not really make sense that price would engineer liquidities and leave all the lows that it was supposed to be taken before maybe a retracement or a retracement to the upside. So yesterday I placed a trade. If you know, I'm trading the CFDs. I'm trading with futures CFDs. But you see, I entered on sales, and my first TP was this relative equal lows. So this is the NQs. And so for those who don't know the difference between trading the E-mini Nasdaq or the E-mini and the E-mini S&P and trading the US, like the US 100, you see, with futures markets, the futures market is centralized and regulated. So it is highly regulated actually. So you cannot manipulate price like what brokers do on CFDs most of the time. So this is the E-mini Nasdaq, which is the NQ in other words. So this, as you can see here, price in the NQ took out this relative equal lows that I was targeting. And if you go to the E-mini Nasdaq, then not the E-mini, the US 100, which is the CFDs. The CFDs is basically just the carbon copy of what NQ does. This is what most of the brokers use if they are not trading the centralized market. So you see that this is just a manipulation of price of what brokers do. Because if you are trading CFDs and you placed your TP here, right here, it won't have been tapped, you see, and just price retraced. Now, for those who are saying I was not following the 4 hour, or the 15 minute, or the 1 hour, as you can see, the 4 hour is bearish, making lower lows and hunting for sales and liquidities. So going into yesterday, obviously I was bearish. Then if you go to the 1 hour also, price was bearish, just tapping into the order blocks and just going to the downside, right? If you go to the 15 minute, let me show you where price was, and that's why I entered. 15 minute, you always think that I analyze the market just in the 1 minute and just execute in the 1 minute time frame. I always analyze the market in the 1 hour, the 4 hour, and 15 minute and 5 minutes before I even enter into a trade in the 1 minute time frame. Now, as you can see that this candle price was here. This candle was closed very strongly bearish, broke structure here to the downside, and formed a fair value. Let me just even mark it. Formed this big fair value gap here. Formed that big fair value gap here. Now you can see price retraced into the 50% of that fair value gap, and it had engineered some relative equal lows with the old low that was formed like a couple of weeks ago. Now the only logical